Hi everyone, I'm Ken from CryptoTradingKS and the CTKS method. If you're new, a very warm welcome and welcome back CTKS family. My goal is to assist you in becoming more of a financial and emotional blessing to yourself and those you love through positive excellence. If you like the content, please smash that like button and don't forget to subscribe. We have one of the best communities on YouTube. We look forward to welcoming you into our global family. There are a lot of free resources on ctksmethod.org. The link is in the description of this video. Let's see where the markets are going in the next 24 hours. And let's run the numbers. Recently, I updated my banner and description on X, and what happened to me? My account was suspended. Even though I have a valid and verified account, what happened was that I updated this and I updated this, and Twitter/X said, we're going to ban your account for doing such a terrible thing." Oh brother. I used LinkedIn for many years before just popping across to X/Twitter. I'm back on LinkedIn. If you want to reach out to me, the link is in the description of this video, and I suggest we definitely touch base on LinkedIn. And to all the ambassadors, please join up. It's so fantastic to see our community there, and yesterday I posted out a video where Jerome Powell said the banks can custody crypto. They can now serve crypto customers. I'm also currently offering a partial scholarship to the Profiting from CTKS Method structure course. You'll need to reach out to me and directly message me on LinkedIn. If you're interested, partial scholarship for the Profiting from CTKS Method structure is absolutely awesome. In week 1, you'll learn how to get your mindset absolutely straight. And there are a lot of resources provided in week 1. Week 2 is all about predicting tops and bottoms and understanding how to go through the cheat sheet. Week 3 is looking over my shoulder and seeing how you can make money in any market condition, especially when the markets are actually coming down. And all of the trades that I did in the Profiting from CTKS Method structure were these down trades. I believe the markets are going to get really volatile this year, and also in the coming years. Week 4 is all about positive excellence and making sure that you can keep your money and dealing with a lot of questions that people have. So please reach out and contact me directly on LinkedIn if you are interested in this partial scholarship. When we look at Bitcoin on a 3-day basis, we can see over the past week it's been a little bit negative, but things are starting to pick up. And at this part of the cycle, we're getting ready for some really interesting price action. Don't forget, price is always moving in a wave. It doesn't look like much here, but when you're going through it, it's a lot. And just coming down to the daily basis, we can see that we're pretty much following the 2016 halving cycle in terms of price momentum. It could get really interesting very quickly. You're going to hear a lot of people talking about price discovery as Bitcoin just takes off and goes upwards. Please understand, there is no such thing. That is a retail term. That terminology means that people don't understand market structure. I'll just explain what I mean. In yesterday's video, we were just here and we were looking at the structural levels below the structural support levels and the structural resistance levels. When people use indicators such as simple moving averages, exponential moving averages, Bollinger Bands, Fibonacci, Elliott wave theory, they are all structurally independent measures, and that's not a good thing. You must know where the structure is inside the chart that you're looking at. For example, when we look at Bitcoin and we use level 1 and level 2 standard certification to draw in these lines are called Stanfield levels or CTKS levels. They represent where smart money is going to buy or is going to sell. When price is below one of these Stanfield levels, it's a resistance, a structural resistance level. I can zoom in there in a bit, but I just wanted to zoom out to show you how effective these things are. And when you have structural levels below price, they are structural support levels. When people talk about price discovery, they don't understand anything about true market structure. Market structure requires a census across all of price history, not just a sliver of price history and then people make up their minds from that. They generally look at less than 1% of price history and try to make a statistically significant decision based on that. Mathematically, that's kind of silly. And it's not something institutional traders or investors do, because institutions look very significantly at price. They put a lot of research into it. Now let's just explain what happened in yesterday's video. You can see that we were starting to break out of all of this once structural resistance and trying to convert into structural support. We did a breakout, we came down, we tested the structural level at 103.373. We had a positive CTKS gap up to around that 106.039, and we saw that we tested that and backed off. Why did we back off, and why did we flatline here? Typically, people would just assume this thing is going to just keep on going on that particular angle. That is not the case. It's always dependent on structure, and if you know where the structure is, you're ahead of 99% of retail. And you don't want to be retail in financial markets because retail loses money, guaranteed. We know for Bitcoin and the entire crypto market, there's a lot of things that we need to look at. But the key thing is that this 106.425 level must be overcome to maintain bullish price momentum. If we get over that level, we've got another level of structural resistance at 108.930 and another one up at 110.171. A little bit later on, I'm going to show you how important it is to actually know where the structural levels are, and we'll use XRP as an example. Now, a couple of things can happen inside the crypto market. If we see the VIX coming down again, hey Ken, hang on a second, what are you talking about the VIX for? This is Bitcoin's chart. Ah, is it really? In the Profiting course, I teach you how to look through the chart that you're looking at. For example, if you're investing or trading in Bitcoin, you need to look through other charts to get the directional momentum and velocity. Intercorrelation and interconnection is vitally important to understand. It will also take you some time to understand how things play out. Here are the VIX futures. You can see they're coming up and they're squashing down Bitcoin. And as soon as they started to decay, we saw a rally inside of Bitcoin. But Bitcoin had its own problems. All of this structural resistance meant that it was going to pretty much flatline anyway, irrespective of that. So, what does this mean to other charts? There's a rule inside the crypto market: no alt can escape Bitcoin's gravity. Where is Bitcoin's gravitational pull? It's this blue line. You can see when Bitcoin comes down, the alts come down. When Bitcoin goes up, the alts come up. So it's very important to understand where Bitcoin is going directionally. We have two things to just consider: the upper bank and the lower bank. The upper bank overextends positive movements up inside Bitcoin's price structure, and the lower bank overextends negative momentum inside Bitcoin's price structure. So far, the upper bank is Litecoin, Pepe, Floki, Bitcoin Cash, Ethereum. Ethereum did something really interesting in the past 24 hours. I'm going to have a look at that. Lower bank is WIF, Trump, BNB, and XRP. When people look at a naked chart like Ethereum, you can see definitely price is moving in a wave. It's always coming up and down, up and down. But we know this movement is due to intercorrelation and interconnection with the CTKS cheat sheet. You can download that resource absolutely free from ctksmethod.org. Now, what we need to do is to look at this structurally. How do we look at something structurally? Well, you can mark up your chart with level 1 and level 2 standard certification, or alternately, we can do it for you through the service. What you notice here, when price was here, we had a structural failure at this level of 1 structural support. With this negative CTKS gap and the VIX spiking like hell, we had a structural overshoot into lower structural levels of support. One thing that was really interesting inside Ethereum in the past 24 hours, we had this positive CTKS gap. I'm just going to throw a couple of values on here for you. Positive CTKS gaps and negative CTKS gaps are pretty much the same thing. I'll just explain. When price is up here and it's got a big gap between structural levels, that's called a negative CTKS gap. But when it's here, those negative gaps can turn into positive gaps, and we see it all the time inside the crypto market. We saw a big movement up in Ethereum, and a lot of people would say, what caused that big movement up in Ethereum? It was this positive CTKS gap. Now, why did it stop here, just at structural resistance around that 3277? Well, it stopped there because there was structural resistance up there, and quite a bit of it. When there's no structural resistance, price can move up very, very quickly, but it also can move down very quickly. That's why these positive and negative CTKS gaps, they're vitally important to understand how to locate them. They're incredibly profitable areas. Inside the CTKS Method service, at the start of every month, I draw up CTKS paths, which are part of Level 2 standard certification. What they basically do is they analyze structure and say where can price go under normalized price conditions. Not adverse price conditions, just normal. And what it seeks to do is to put a reasonable explanation as to where something can end the month, either from a positive stance, a neutral stance, or a negative stance. Now you can see these paths, well, the members of the service know that these paths drawn at the start of the month are not changed. How did I know that XRP would come up into this area and flatline? This is a very big difference with what happened with Ethereum. Now, how did I know that? How could I see a month in advance? It's all about structure. When you understand where the structure is, it is a game changer. Just zooming in there a little bit more, you can see the positive CTKS gap, the negative gap, the positive gap. You get the idea. Knowing where the structure is vitally important. How on earth would you know where the structure is if you looked at price like this? Throwing a simple moving average on it would yield absolutely nothing for you. An exponential moving average, just the same. Because we need to know where the actual structure is inside the market. The way that you can do that for yourself is through Level 1 and Level 2 standard certification. Or alternately, you can just subscribe to the service and get these indicators for TradingView. You can see these indicators literally give you X-ray vision inside the market. You can tell where things are likely to just run into trouble and start to flatline. The profiting from CTKS method structure is so incredibly powerful. It's worth a fortune to you. And if you're interested in getting a partial scholarship, just reach out to me on LinkedIn. The link for my LinkedIn is in the description of this video. And just a call to the ambassadors, please do so. Please hook in with me on LinkedIn, as many have done already. We also know that it's incredibly important to look at total crypto market cap, because total crypto market cap gives us an insight as to where Bitcoin can be turning around or is getting into trouble. Right at the current time, it's very hard to know where the structure is, so let's just pop on the structural indicator from the service, and that effectively marks up your chart with Level 1 and Level 2 standard certification. What we can see here is that we did get above that 3.49 trillion, and we were just whacked on the head around the just a little bit under the $3.54 trillion mark. Now, what does this mean for Bitcoin? We must get above this structural resistance in order to confirm bullish price momentum. if we start to come down, undersigned retest that $3.49 trillion mark, things could get very interesting inside the market. But just don't always remember, and don't forget, price is always moving in a wave, and some of these waves can be quite severe, both to the downside and to the upside. So long as you know where the structure is, you're safe. And of course, for active traders and investors, you really need to know what the cheat sheet is doing directionally every single day. It's vitally important. Some members of the community have reached out to me and said, Ken, what are the extended levels all about? The extended levels are about seeing much more than is possible with the normalized price view. The normalized price view, which we do through the service, is one thing. It seeks to understand where prices can go on a normalized basis. The extended levels give you an annual view. Therefore, instead of seeing normalized price action, you can see literally 12 months of price action. It gives you so much insight. And there's currently 3 elite extended indicators available, one for Doge, one for SHIB, and one for Pepe. These are ideal for investors. For example, if you were looking at XRP and you said, okay, Ken, this is normalized price action, but what is the potential resistance above here? When you think about price discovery, a lot of people mess it up completely. They think that there's absolutely nothing but fresh air up here. That couldn't be more false. There is always structural resistance overhead. Getting a month-by-month view on where price could go is really vitally important. Inch by inch, life's a cinch. So think about it like that. But if you want to see way above price and way below the normalized price, the extended levels are for you. So I just wanted to explain that because quite a few people have reached out. So that's what it's all about. And please let me know, would a Bitcoin extended level chart be of interest to people? I'd like to thank everybody for their comments on yesterday's video. We talked a little bit about AI and the impact on work, trading, and investing. AI is causing a new industrial revolution, and it will cause massive unemployment in the traditional employment markets. It will also create enormous opportunities for people who can be self-employed. I'd just like to thank everybody for their comments. It's just amazing because if you think about X/Twitter, I'm pretty sure some little AI agent got in there and said, this looks dodgy. This person is changing their profile picture and their description. I know what I'll do. I'll suspend the account. Thank you very much. A lot of people, for example, Dinesh and Michael and so many other people, talked about the problem with AI is it cannot do human judgment. If you've ever spoken to a chatbot at the banks or just wherever and you ask it a question, you probably will get to the point, I need to speak to a human. And other people talked about using AI, and AI does work until it breaks, and it breaks very frequently. The concept is, okay, one day it won't break because it will learn from itself. Yeah, but what is it learning? For example, in the retail market, which is literally all of YouTube when it comes to crypto, stock, and Forex investing, that's all publicly available information. And it's all, well, the majority, 99% is retail. You know, the gasping faces and the, oh my God, it's 1929, just a couple of days ago, right? It was the Great Depression. Oh, what happened now? It's not the Great Depression anymore. As Michael wisely said, I personally would not rely on AI to be trading with my money. I can't agree more. There have been many documentaries done on high-frequency trading, those little bots that have been running for years and years, actually decades, and high-frequency trading has been identified as probably the thing that caused the great financial crisis, the global financial crisis, the GFC. And this is always the problem with computer programs. When somebody sells down, somebody else tries to beat that price in nanoseconds, somebody else tries to do it, and we're talking about bots here. The stuff that a lot of people who say, oh, I don't know what to do, I'll just give my money to a bot. Oh my goodness, please don't do that. It may work, it may not, but guaranteed long term, you're going to get smashed. I think Daryl said it really well. He said, I had an old boss that said computers make mistakes faster. And when you think about AI, AI is very biased. Ken, how could you say that? AI is biased? Yeah, it is. Anybody who knows anything about AI knows that the people who put together the engines decide what gets in and what is omitted. They don't say, we'll put everything in. No, no, no. They have their own agendas. That's why if you ask certain AIs certain questions, you will not get an answer. Now, what happens when those AIs are programmed with retail trade perfection, the open mouth as it's coming down and the to the moon as it's going up? Well, it doesn't take a brain scientist to understand, or a brain surgeon, to understand that that is going to be a bad AI. Well, what about AIs that are just responsible for just trading off moving averages? That is, they're non-structurally aware. Well, kiss your money goodbye at some stage. Can AI bots work? Yes, of course they can work. But in the long term, I don't believe so at all. And Daryl said this is likely an AI locking Ken out of my ex-Twitter. I believe that's absolutely correct, what Daryl and others have said. It would be some AI that has a stupid instruction and it's just flagged the account. Absolutely ridiculous. We have been unrelenting in our capability to get rid of all sorts of problems on X/Twitter, but of course that doesn't count. And what Daryl said here, I believe, is incredibly good. The bottom line, it may come to pass that AI makes errors on steroids. Hence, an AI error can have financial costs into the billions and even the trillions. Absolutely correct. And you may not have billions or trillions, hey, who does? But your hard-earned money will go the way of the dodo if you trust AI too much. With more and more agents, RGX said something really interesting. More and more AI bots in the market actually increase volatility because they're all programmed differently. That means that trading with the CTKS method is very, very powerful because we know that an institution of one mindset is what we apply to the markets. And Pacific KO said, how do I apply for the scholarship? Just reach out to me on LinkedIn, my friend. Grey Motion said it really well. It depends on the ultimate intent of the user, how AI, machine learning, all of these things can work. Grey Motion said, from what I've read, there appears to be an agreement that AI is highly susceptible to market manipulation. Absolutely. Built to Spill said something incredibly good as well. AI is the ultimate creation of the system. What is the system? The system, just like the Matrix, is designed to enslave. It's not designed to liberate. It's not designed to free. And Built to Spill said, its goal is to not make me a blessing to my family and loved ones. The film The Matrix resonated with so many people because when you get to a certain level and you've sat on government task forces and you've done work at the top levels of multi-billion-dollar corporations, you know that the Matrix is real in the sense that control is real. There are the haves and the have-nots. The haves have the system. The have-nots are plugged into that system and are not allowed to escape. Therefore, AI trading bots, just like retail trade perfection, oh la la. The thing to note, AI is real and it's coming. And of course, we know that price is always moving in a wave. We must be able to take advantage of that in up waves and also in down waves. These are very important skills, and we need to leave our emotions at the door. Learning how to harness AI is really powerful. But please don't think of AI as a solution to anything. It's just a tool. In the future, AI will cause a lot of unemployment. So therefore, understanding how you can make money through self-employment is vitally important. I actually talk about AI in the Profiting from CTKS Method structure course and how you need to be prepared for it and raise your financial literacy as well. Something for the comments. Where do you think Bitcoin is going in the next 24 hours? And also, what is your favorite crypto or stock to trade with the CTKS method? Please make sure to connect with me on LinkedIn. You can find the link in the description of this video. And also, it's just here, linkedin.com/IN/Ken Stanfield. Stanfield has 2 D's in it. I like to stand in the field. If you'd like to apply for that partial scholarship, just log in to LinkedIn and message me directly. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.